What is going on YouTube? Welcome back to another video. Today we're going to be talking about the difference between asset management and investment banking careers. Now this is going to be appropriate for you if you're considering applying to a spring week internship or grad scheme at an investment bank and you don't know the differences or you're keen on finding out which is more suitable for you. So stick around if you're interested in finding out the differences in terms of the nature of the work, the clients, the risk, the time horizon, compensation, skills required, hours, qualifications, exit opportunities, and more. With that, let's get straight into the video. All right, first and foremost, let's talk about the nature of the work. So what do asset managers do, or what will you be doing in asset management, and what do you do in investment banking? So if we start with asset management, predominantly, you're basically managing money for large corporations. That could be large corporations, pension funds, insurance companies, sovereign wealth funds, so on and so forth. All of these large institutional investors have money that they need investing into the financial markets because they don't want it sitting in the bank, eroding due to inflation. They want to invest it in order to get a return. Those returns could be, they could be targeting a very high return, or they might be targeting a return where they just meet inflation so that the money doesn't lose any value. Therefore, essentially in asset management, you're basically managing money for your clients and investing it into the financial markets. How does investment banking differ from this? Investment banking isn't involved with the management of clients' assets or capital. You're not investing it in the financial markets to help them get a return. Instead, investment banking is more focused on advisory. You're advising companies on how to raise capital. Now, they can do this in a number of ways. You can raise capital through, when I say capital, I mean money. You can raise money through the debt markets. You can raise money, so think of loans. You can raise money through the equity markets, so giving out pieces of equity of your company. So that's called equity capital markets. You've got debt capital markets. Companies need advice on how to acquire other companies or merge with other companies. So that's called mergers and acquisitions. And you've got other parts of investment banking. So all you need to know, asset management focuses on investing clients' money into the financial markets in order to get a return. And you do that over a long period of time. And investment banking is focused on advising companies on how to raise money or do strategic takeovers or acquisitions of other companies. One is investing, one is advising. That's the key difference. Also important to note, within each there's going to be different roles, right? So in asset management, you've got investment professionals, you've got salespeople. And then in investment banking, you've got specific groups, you've got industry groups, you've got product groups. So some people might focus on a specific industry like technology or healthcare, and then other people might specifically focus on a particular deal type. So they might just do M&A transactions regardless of the industry. They might do equity capital markets or debt capital markets for all industries, but just that might be the only type of deal that they do. All right, so next we've got the clients of asset managers versus the clients of investment bankers. Typically, the clients of asset managers are pension funds, insurance companies, sovereign wealth funds, large institutional investors. So all of these organizations and investors have lots of money that they need investing. The clients of investment bankers do differ from those of asset management. In investment banking, you could be advising a startup or a scale up, for example. So an entrepreneur who's built this company, they need advice on what to do next, or they want to raise some money. They would come to the investment banker and you would help them. You could be advising Fortune 500 companies. You could be advising governments. And so the clients of asset managers versus investment bankers do tend to differ quite a bit. And the reason for that is because the clients tend to be looking for different things. For example, if you're a startup or a scale up or a Fortune 500 company that's interested in growing, you're not going to want to lock up a lot of money with an asset manager to invest it over a long period of time. You're going to be interested in finding ways to grow your business or acquire competitors. And that might include raising capital, whereby you would reach out to an investment banker to make it happen. Before we carry on, I want to introduce today's video sponsor, XTB. XTB is an online trading platform that gives you a wide range of access to lots of different financial markets. They're a very user-friendly, easy to use platform, and they come with tons of benefits, so listen up. They're regulated by the FCA, the Financial Conduct Authority, which helps them in their commitment to provide transparent and reliable services. My favorite thing about XTB is that it's an easy to use platform, it's very accessible, and best of all, they make trading suitable for traders of all levels, regardless of whether you're a beginner, intermediate, or advanced trader. XTB offers access to over 2,100 financial instruments across foreign exchange, so FX and CFDs, contracts for differences. In addition to this, they offer competitive spreads and commission-free trading. What's more, they focus on education and accessible resources for traders of all levels. And also, get this, they offer one-to-one mentoring. I don't know many trading platforms that do that. So if you want to improve your skills, whether you're a beginner, intermediate, or advanced trader, they've got tons of online educational resources that you can leverage. Furthermore, XTB offers advanced risk management tools. This will allow you as a trader to make more informed decisions and manage your investments effectively. So if you're interested in getting access to a wide range of financial markets, a user-friendly platform and tons of educational resources, you should sign up to XTB using the link in the video description. And it goes without saying, always trade responsibly and follow a well-defined risk management strategy. Now let's get back to the video. All right, next we've got the risks. What risks are involved in asset management and investment banking? So typically in asset management, you are focused on managing portfolios. So the key risk is you invest clients' money into the financial markets and the markets go against you. So it's important for asset managers, the portfolio managers within asset management, to manage risk effectively. So a key part of managing portfolios is to diversify portfolios and mitigate any risks that can impact or negatively impact the portfolios that you're investing into the financial markets. So the key risk factor to keep in mind in asset management is managing risk across the financial markets and your portfolios. In investment banking, there's lots of risks as well. For example, if you are working on a deal where a client wants to raise a lot of money, you need to make, whether that's through equity or debt, you need to make sure, one, if you get the amount that is required, you're able to purchase it and, you know, sell it accordingly without taking on too much risk. You don't want to acquire lots of stock of a company or underwrite a loan, take on that risk where you're holding all these securities and then one of the two sides bails on you, so you're left with securities that you can't sell, or you sell it at a discount, which means you lose money. So there's a lot of risk involved in both sides. In terms of the time horizon, asset management is a very long-term business. So you are taking on money from clients and you're investing that money over 5 years, 10 years, even longer sometimes. It's a very long-term business and your relationships with your clients are going to be spanning a long-term time horizon. In terms of investment banking, the business tends to be shorter than asset management. You're focused on a deal by deal basis, right? So each deal comes in, you might work on it for 3 months, 6 months, a year, and then that ends and then you move on to the next deal. A deal is very rarely going to take 5, 10 plus years. So the nature of investment banking tends to be shorter time horizon focused compared to asset management, which is a lot longer. And what this means is in asset management, you get to build stronger relationships with your clients. You build strong relationships with your clients in investment banking as well, but it might mean you are not with them on their investment journey or their financial journey as you might be with asset management clients. All right, compensation. So how do asset managers get paid and how do investment bankers get paid, and also who gets paid more? Asset management firms predominantly earn money from fees. So what this means is they charge typically a fee for managing any money that is invested with them. So if a client gives them money to invest in the markets, they get a fee for managing that money, and then they also get a fee for performance. So it aligns their incentive, right? So if they make the money that's invested in the financial markets perform well, they get a performance fee, so they get a small cut of that. And in terms of investment banking, each deal that happens, the investment bankers charge a small fee. So they take a cut from every deal that they execute on. In terms of asset management and investment banking, the sizes invested or the sizes of the deals could be ranging from a couple million to a few $100 million to a few $1 billion. And so the fees that are charged, both on the investment banking side for execution and the asset management side for management or performance fees, tend to add up, and so they make a lot of money. Now, who earns more money, investment bankers or asset managers? Typically, when you start as a graduate, you're going to be earning similar base salaries. Investment bankers in America will probably get paid a bit more, and then the bonuses tend to be higher for investment bankers. So total compensation, salary, base salary plus bonus is always going to be, or for the most part, going to be higher for investment bankers. They tend to work a lot longer hours, and naturally in an investment bank, the investment banking division is the most well-paid division. That's not to say you don't get paid well in asset management. You get paid handsomely in both, but yes, investment banking wins on this occasion. All right, so you want to break into asset management or investment banking, but you don't know what skills you need. The skills you need to break into either of these are very similar, but there's one main difference for investment banking. But for the most part, before we get into that, you need to be a strong communicator, strong team player, good interpersonal skills. You need to have attention to detail. You need to have a good eye for detail, basically. You need to have strong analytical skills. But if we get into the weeds, if you know Microsoft PowerPoint and Microsoft Excel inside out, that would be great. The key difference is in investment banking, you're going to be on Excel creating a lot of models, valuation models on companies. So if you know how to do that before you break into the industry, you'll be a step ahead of everyone that joins you at your peer group level. So that's the key key skill I would say if you want to get into investment banking, learn how to model and do valuation on Excel. So yeah, valuation and modeling, if you can get that under your belt, that will be helpful for investment banking. For asset management, PowerPoint, Excel help as well. But in general, if you know what asset class you're going to go into, if you're in an investment team in asset management, whether that's fixed income, alternatives, equities, it always helps to increase your knowledge before breaking in, because it will make the transition smooth. With investment banking, if you can keep up to date on the latest mergers and acquisitions or the latest equity fundraisers or debt capital market raises, whatever it might be, then it's always good to keep abreast of what's going on in the world. That will help you stand out compared to other candidates. How do the hours differ across the two areas? Asset management hours typically at the junior end, we'll focus on the junior end because that's where you do the longest hours. They tend to be anywhere between 10 to 14 hours a day. Let's say 12 hours a day on average, so anywhere from 7 a.m. to 7 p.m. In investment banking, it's a lot longer. So in investment banking, you can expect to do 14 to 16, 18 hours a day in your first 2 years. You can sometimes expect to even work on weekends. But as with all types of industries and roles, the more senior you get, the less hours you're expected to do. However, the decision-making responsibility does increase a lot. So you might be working less hours, but you're going to be still under quite a bit of stress because each decision you make will have a huge or larger impact than it would have as a junior working long hours. Qualifications. If you want to break into asset management, it's good to do the IMC, Investment Management Certificate. This is something that I think every salesperson does because it allows you to advise clients. If you're interested in the investment types of roles, then focus on the CFA level 1, 2, 3. It shows that you're serious. Every single person in the investment side, 99.9% of people on the investment side in asset management have the CFA qualification. It's a very well recognized, well regarded qualification to have in the industry. Also for asset management, you could look at the Financial Risk Manager, FRM. That's a good qualification to have. A lot of people in the industry also have it who are on the investment side. If you want to break into investment banking, CFA, a lot of people have it, but it's more relevant for like portfolio management, hedge funds, and buy-side roles as opposed to investment banking. But you can do CFA, or you could do your series exams. I'm not too familiar with them, I'll be honest, because they're an American thing. But I know there's like Series 6, Series 7, Series 63, Series 7E something. All these series exams which basically help you get to grips with the universe of investment banking. All right, last but not least, exit opportunities. After you spend a few years in asset management, you can start moving over. Some people actually move into investment banking. Some people move to hedge funds. Some people move to the sales and trading floor. Some people go and start their own businesses. Some people go into management consulting. Some people do completely different things. So asset management does have great exit opportunities. Although it is probably easier if you're interested in breaking into private equity or venture capital, it's easier to do so if you've got investment banking experience. And the reason for that is because when you move into private equity or venture capital, for example, you're working on lots of, it's similar to investment banking, deals. And so if you've got that deal type of experience in investment banking, so it makes the transition easier. Whereas in asset management, it's not deals, it's portfolio management, investing, or sales client relationship management. That's more relatable or relevant to a sales and trading floor, or working for a hedge fund where you're investing different markets. Or if you were like a fixed income trader or portfolio manager in asset management, it will be easy for you to move to a fixed income hedge fund where you're trading or investing in similar products. If you enjoyed this video, if you made it to the end, give it a thumbs up. If you're new around here, subscribe, and I'll see you in the next video. Peace.